If you happen to have joined us last night with Nicholas Gibbs, you'll know that, he said we'd have a flat market. And so far this morning, he would be right. We'll see if that continues to be the case up to the time of the Fed speaking. Now, when they actually come out with their report at 11 o'clock California time, I guess that's 2 o'clock East Coast time, then, lots of things could happen after that. Who knows which way it's going to break? We will talk about that, though, later in the episode. The Tesla's up a little bit this morning, $1 or so that's good. We're hoping that continues as well. All right, Tesla Larry says today, he says, FSD, hi guys, I interviewed my friend from Amsterdam, Kees Rolenschap, and he was talking about the global rules around FSD. He says, it looks like we're about to launch globally. So what the story is there is that you have these rules that are being promulgated by the United Nations. There's a United Nations group that is coming out with a set of rules, and these rules apparently impact most of the world. So Europe totally pays attention to them, maybe the UK, Australia, Japan apparently definitely pay attention. The United States pays some attention to these United Nations rules. China apparently not, doing their own thing. But anyway, all of that is supposed to be kind of wrapped up by the end of the year, maybe the beginning of next year, sometime in the first quarter, which must be why Elon believes that Europe and China, everybody will be ready to go the beginning of next year. So that'd be pretty exciting. From Teslarati this morning on Tesla Semi. The Tesla Semi program is arguably one of the most intriguing with the scope of the company, within the scope of Tesla, the company, in recent memory. But it's only getting started. During the IAA Transport Show in Germany today, the Semi's head of engineering, Dan Priestley, unloaded tons of new details on the vehicle, including plans to leverage several different variants of the electric truck, how its efficiency stacks up, and various Easter eggs that the company has discovered through its fleet operation thus far. Tesla Semi sleeper section and large side storage teased in a new video. So they have you can see all of this in a video that's out right now. You check that out by going on X. But anyway, Tesla's going to have several configurations. Can be purchased according to the buyer's need. It says, thanks to Tesla's vertical integration, manufacturing will be simple. Mass production, of course, 50,000 units starting next year. Priestley said in his video, we aim to be competitive at the upfront price with diesel. Man, I was hoping they would just maximize, just really have a much higher price than diesel. But anyway, they expect to be competitive in order to accelerate the adoption of electric trucks as quickly as we can. Again, this is on lock for Tesla's deep vertical integration, and we will plan to leverage this into multiple variants. We will be taking on a wide variety of applications and vehicle types. He says that the article goes on to say, Tesla, along with the companies that have been operating the vehicles in their pilot programs, have routinely flexed the efficiency of the Semi. Pepsi details how its Tesla Semi fleet is helping it reach sustainability goals. But Priestley said that at the conference that common industry numbers are approaching 100 kilowatts per 100 kilometers traveled. And the Semi has already achieved this. It will only get better when Tesla comes back to its high volume version of the Semi. Higher efficiency means lower battery mass and cost, meaning a less expensive product and lots of advantages for the consumer. Despite the Tesla Semi being a vehicle that is relatively new and only been operated on a controlled basis, only they have, here are some of the stats. Over 4.6 million miles have been driven by Tesla Semis already. One Tesla Semi has gone 248,000 miles, and it only took 18 months to get to that point. The fleet has a 95% uptime. That's so important to these truckers. And then Sawyer Merritt reports this. He says, PepsiCo said today their drivers who operate the company's Tesla semi-trucks have reported that after driving the electric truck, they don't want to go back to their diesel trucks. Other reporting is saying that Tesla has noted that they have been able to replace their diesel fleet 1-for-1 across all trucks. Sawyer Merritt on another subject is reporting this morning. He says another wave of Tesla FSD 12.5.2.1 is going out to both HW3 and AI4 Teslas right now, making it the third wave in the last 24 hours. By the way, I did maybe misspeak yesterday, but I was just quoting somebody else's misspeaking. There is no, I don't think there is anything such thing as a 12.5.2.5. But somebody else said, use that number, and I just repeated their number. This from AJ this morning. He does a deep dive into auto market cash flow trends. And these were, after a bunch of charts as he normally does and this was on his subscription account. He says, which I am paying for, folks. So, if you want to help me out on Patreon so I can pay for all these extra things that we do for you. Anyway, the good time, he says, these are his concluding remarks. Number one, the good times for the auto industry ended in the third quarter of 2022 for most automakers. Since then, we've seen a consistent downward trend. Taking into account first quarter seasonality, second quarter 2024 marked arguably the worst quarter since 2020. In the second quarter of 2020, which was severely affected by global production shutdowns. The big picture, he says, he expects stress in the auto industry to ease near term, since the current level of cash flow is unsustainable. Stress in the auto industry to ease near term. Okay, various automakers announced strategic shifts. Oh, because they're announcing strategic shifts from getting out of reducing their investment in the BEV programs and more on hybrids. What will this easing stress look like, he says? He expects automakers to concede market share and retrench increasingly into remaining lucrative niches. Ford in particular in their pro stuff, the stuff that gets sold to truck fleets and various other kinds of fleets, and General Motors, of course, into their trucks. Quartz has this morning. I rarely quote Quartz, but they've been getting better. Some of their articles are better now. Owners of GM electric vehicles will gain access to the 17,800 Tesla superchargers beginning on Wednesday, thanks to a new adapter, that the Detroit maker is now offering. Although GM made no mention of shipping out free adapters to existing customers, a step that both Ford and Rivian took. Maybe they're going to do that, maybe they're not. The adapters will open up more than 231,800 public level 2 and DC fast chargers across North America to GM users. Customers in the US will be able to buy these 225 adapters. Canadian buyers will have to get them later this fall. Now, this is a major consideration in marketing. This is Randy speaking now, not some article. Okay, so in marketing, sometimes you're advertising your specific product, your specific the group that you're trying to reach. Other times you're advertising for the industry as a whole or for a sector within that industry. And so you can imagine, like in the industry I spent most of my life dealing in, well, all of my life actually dealing in the bicycle industry. You might have Trek Bicycle doing ads on TV for how fun it is to go out and do mountain biking. And sure, they might use a Trek in the ad, but it would really be an industry kind of ad to get more activity, more interest in the entire industry, and then they benefit from that. Well, the opening of the supercharger network is exactly like that. The number one concern that consumers have about buying any EV is range anxiety. It has hurt the entire business, and it's hurt Tesla as a result, because some people don't differentiate and go, oh, well, there's no range anxiety on Teslas because of their superchargers, because they don't know that. There's no way. It's very hard to get consumers to have that kind of a narrow piece of information in terms of how they make their decisions. So by opening up to all the other guys and reducing range anxiety for the entire sector, this will help Tesla. Brilliant, absolutely genius move from Elon. From the Detroit News today, we have a super long article, but a fun read. Henry Payne loves his Tesla. So Henry Payne is a automotive writer for the Detroit News. He says, my Labor Day trip up north, I'm not reading the whole article. I'm just going to read a little bit piece of it here. My Labor Day trip up north was like any other adventure in my 2019 Tesla Model 3. I unhooked the car charger, stowed my luggage in the trunk, and put my computer bag in the front. Recognizing the key card in my wallet, the car unlocked automatically, then silently turned on when I depressed the brake pedal. Before backing out of the garage, I checked the details on the latest overnight software update. In the 5 years since I bought my Model 3, Tesla Inc. has remade the auto landscape, and for nearly 5 million owners worldwide, it has introduced a different car owning experience from its pioneering electronics to its battery-powered operation. This is my 5-year anniversary reporting on living with an EV. As a Detroit News auto critic, I test more than 100 cars a year. The Model 3 has maintained its freshness, pushing the envelope in over-the-air updates, dealer service, and autonomous driving. I've tracked it, road tripped it, dream cruised it, and loaned it to Car and Driver for an EV comparison test. So there you go, folks. And he goes on and on and on. Now, there's a car expert who drives 100 different cars a year to evaluate them, and he just loves his 5-year experience with his Tesla. All right, this is Randy Kirk. Like, subscribe, notify. I am planning to have a video with Scott later this morning. Then I will do something right after Powell speaks, so that'll pop out at about 1:30 California time, 4:30 Eastern. Then I'm pretty sure that Joe will be joining me for Good News Wednesday at about 5 o'clock California time. That video will come out. So there's a little bit up in the air. I'm pretty sure the Scott video is coming out. I'm pretty sure that the Jeff Lutz video comes out. So check them out as the day goes on. All right, this in the general, by the way, you can join Patreon. I did mention that earlier. This from the general news this morning. U.S. housing starts surge in August, beating expectations. U.S. housing starts jumped to 1.356 million in August, surpassing the expected 1.31. 1.35 expected was 1.31, and it's a 9.6% increase from the previous month's 1.237. So you got a big increase here in housing starts. Building permits also rose to 1.475, exceeding forecasts of 1.41, and a big increase over 1.4 the month before. Now, this rebound follows a post-pandemic low in July, but remains insufficient to meet the demands of population growth. We know this, of course. Anyway, that was from Forex Live. This is very good news for the housing business, and it's an obvious response to the fact that we're now down from 8% interest rates down closer to 6%, right around 6.2 right now for a 30-year fixed mortgage. And guess what? When the Fed makes this decision today, in general, it doesn't mean that we're going to see lower mortgage rates going forward. These are baked in usually before the Fed moves. Now, it could drop down a little bit more, and I wouldn't be shocked to see 5.99 or whatever, but there's kind of a new rule in the mortgage game. You know, most companies, most mortgage lenders, most banks now give you an opportunity to, you get your mortgage now, and then you can refinance within a year, or there's different rules for different people. At a low cost. So you can get in, you can get your house while the prices are low, because they're going to go up, absolutely going to go up the rest of this year into next year. Absolutely count on it, because interest rates are coming down. So you can get the house now at a little higher interest rate, and then later on you can refinance. It's a very smart move. Now, by the way, as I mentioned before, if you're thinking about getting a house, you should call my friend Bill Rayman. He's my client. He does not pay me to say this. He does pay me to help him get business. So you can take that how you want to. But Bill Rayman, he's a Wharton School graduate. He is a lots more than that. Yale, I think. I forget all the schools he went to. Physics degree, and then a MBA. Anyway, look up Bill. He's down below in the description if you would like to give him a call and get started on your mortgage, getting qualified. All right, Mario Knopfel this morning, he says U.S. consumer outperforms expectations as the Fed mulls rate cuts. Despite strong consumer performance, the Cleveland Fed's real-time inflation forecast for September is down to 2.27, which is below the 2.5 CPI the other day. Now, 2.27 be getting really, really close to the Fed's, hopes and dreams of 2.0. With inflation seemingly under control, experts suggest the Fed may view its current rate as too high. Yes, we've been talking about that for days. Analysts are now pushing for the 50 basis points, and we'll see what happens later today. Now, another place I don't commonly quote is The Street, and I'm sorry that this article is not well written, but anyway, I think the information is relevant, so I'm going to quote The Street today. Deutsche Bank has a new face covering auto stocks, and he seems very bullish about Tesla. This week, analyst Edison Yu initiated his coverage of automotive stocks for the Frankfurt-based bank, handing out a buy rating with caution. In his note, he wrote that he's very optimistic about future earnings as the air around the greater auto industry starts to normalize. We see the U.S. auto industry in the later innings of a cycle that is already showing signs of normalization after all the pandemic stuff. I said that, he didn't. Though his wording sounds like doom and gloom, you reassure that historically the American consumer has proved to be highly resilient. In other words, I think what he's saying is he's expecting automotive sales to pick up again later this year and into next year, and he's probably right about that. But as he sat at his computer and began to type, the reality was that American consumers were facing high interest rates that made car payments too high, inflated car prices because of the pandemic, a drop in used car prices now after the pandemic, and eventually this would lead to a drop in new car pricing, which is happening. I'm adding all kinds of parenthetical things in there to make this read better. As a result, you rated shares of Tesla rival Rivian, Ford, General Motors, and Polestar as holds. However, he does make one exception. That's Tesla itself. Like Tesla bulls, like Dan Ives, for instance, he sees it as more than a car company. We do not see Tesla as an automaker, but a technology platform attempting to reshape multiple industries deserving of a unique type of variation framework, wrote Yu. He also noted that the Elon Musk-led automaker is in a league of its own. I think we might have quoted this earlier this week. He has a buy rating with a 295 price target. Following the same sentiment as Deutsch, the automotive industry is pretty much worthless if there aren't people around to spend their hard-earned dollars, euros, yen, won, and pounds sterling on the metal boxes and four wheels that manufacturers spend billions to produce. And that is according to the new edition of a consumer survey conducted by Bank of America Global Research. Big ticket spending by consumers in the United States is down. We know this, including spending on homes, home renovations, home improvements, and most importantly, new cars. The research term found that the number of people expecting to buy a new car has been on the sequential decline since May of this year, with 37% of those expecting to cough up versus 38.5% in August 2024 and 39% in September last year. So Bank of America thinks that the automobile business is down right now. I think they're right. And I think that will continue to be true for at least a little while longer. But then it might really bump up towards the end of the year and into next year. All right. So, okay. Let's go ahead and look at what's happening in the markets right now. I'm sorry, I was a little bit disoriented by a headline. All right, Tesla up 145 with the Dow down 53.62, the NASDAQ up 21.21, and the S&P up, call it barely changed, 1.42 up. So yeah, this is kind of the flat market that Nicholas was talking about last night. We got the Magnificent Seven split with Apple, Google, and Amazon up. Apple up strongly, actually, after being down. People talking about not a great cycle coming up with the new phone, but man, they're flying this morning up $3.87. But you've got Microsoft, NVIDIA are down, and Microsoft down sharply at $2.86. You got the Cathie Woods also mixed. So PayPal and Square, which were up yesterday, down today, and the other ones are all up, except, yeah, that's correct. All right, so what are the percentages for those of you who like that information? Not very high percentages here. The Dow is down 0.19%, the NASDAQ up 0.13%, S&P down 0.02%, and Tesla up 0.7%. Okay, let's go ahead and look now at the bonds. The bonds, well, we got a little bit of action going on here in the bonds this morning. So you've got the 10-year up 5.2 basis points, maybe getting a little shaky, a little nervous that it's not going to be 50 after all. 5.2, but still under 3.7 at 3.696. You've got the 2-year up a little more than that, actually, up 6.9 basis points at 3.661, but still properly verted, if you will. Is that a word? And the 2-month is only up 0.5 basis point, so that is widening out a bit. But it has come down a lot. It's under 130 now, under 130 basis points in the wrong direction. Okay, oil. This morning, the oil patch is showing down a bit, 43 cents, roughly for Texas Intermediate, 52 for Brent. Both of them now over 70, 72 for Texas Intermediate, 73.16 for Brent. Interestingly, that's under the $3 split that we normally see. Natural gas this morning down a bit, down 1.25% at 2.295. Gold gaining a tad, moving still under 2,600 though at 2,596, but up 370 this morning. Silver burning off a little bit, a little profit taking here after a very big run up. It is at $30.71.5 up. Down 0.85 today. Copper up 0.41% at 429. And the dollar down against both the Japanese yen 0.34 and down against the euro 0.03, barely down, just a tad down. Bitcoin down 719, going back under 60,000 again at 59,468. And there you have the complete list. So, as I mentioned, later this morning, Scott Wolter, almost certainly right around, say, 11 o'clock my time, 2 o'clock Eastern. Then after that, I'll listen to what happens with the Fed. Somewhere around 1 o'clock, 1:30, I haven't decided who I might get as a co-host for that show, but somewhere, let's call it 1:30 California time, I'll come out with something with regard to what the Fed did. And then Jeff Lutz at around 5 o'clock California time, we'll have Jeff helping out with Good News Wednesday. Theoretically, all that's in theory. Things could change as the day progresses. We'll see how it all works out. And then, hitting the like button, if you haven't already done, that would be a very good thing. And then we will look forward to seeing you later today. Remember to go down and join my Patreon account. Yeah, that'd be a big help. All right. Okay. That's all I got for you right now. It has been great talking to you. We hope the Fed goes 50, right?